The best trading tutors and mentors don't flaunt their expensive cars and houses online. You're probably thinking why I'm saying so is because I don't have expensive cars and houses. And you're very correct. Because when I start trading big, I mean, I'll do all those things. Today, I want to talk about the difference between our normal buying and selling in physical markets and the buying and selling we do here in forex or crypto trading. Okay, remember in my last video I told you that trading is simply buying and selling of an asset. Okay, it could be crypto asset, forex asset, and stuff like that. But now, if trading is just buying and selling, so what is the difference between our physical buying and selling? Now, before I move on, there is a type of trading that looks exactly or that feels exactly like our physical buying and selling. That type of trading is called spot trading. It's a type of crypto trading. Okay, so let me come again. So we have crypto trading, and inside crypto trading, we have a type of trading called spot trading. Now that spot trading is exactly like our normal buying and selling. In that case, if you have $10, if this can of Sprite costs $10, okay, and you go to the physical market, you'll be able to get just one can of Sprite. That's the same way if one Bitcoin, for an example, costs $10 and you go to spot trading, you'll be able to buy just one Bitcoin, okay? So you see the similarity. You get the exact quantity for the value of your money. Okay, now there's another type of trading in crypto trading called futures trading. I just explained spot trading. Now we have futures trading in crypto trading. Now this futures trading is the one that looks exactly like forex trading. Why? Because we have the opportunity to leverage. Now leveraging is a whole concept on its own, which I will explain in a different video. Okay, so as not to make this particular video long, because leveraging is a lot to explain, but I'll briefly summarize it in this video. Now leveraging is just about multiplying the money you have. Okay, so imagine you go to buy this can of Sprite and you have $10. This Sprite costs $10, and the person selling this Sprite to you is telling you, I want to give the opportunity to multiply this your money. Okay, so he's telling you that this your $10 you have, I want to give you the opportunity to use times 10 leverage. Now, if you use times 10 leverage under your $10, you will have $100, because times 10 leverage is simply $10 times 10. Okay, now the funny thing about this times 10 leverage is that what they're actually borrowing you is $90. Now that remaining $10 is your own that you came with. So you have $10 and they are giving you $90. That's what makes times 10 leverage. So what you came with is now times 10. Okay, so you have $100. Now instead of buying just one bottle of Sprite, you'll be able to buy 10 bottles of Sprite. Okay, so how does this really help us? If you're buying this Sprite to sell later, if on spot trading and in the regular market, you buy just one bottle of Sprite because you have $10. If this bottle of Sprite moves to $11 and you want to sell it, how much profit do you have? $1 profit, right? Good. Now, if the person selling this Sprite to you offers you leverage, okay, and the person borrows you $90, $90 plus your $10 is $100. Now you'll be able to buy 10 bottles of this Sprite. Now, if this Sprite rises to $11 and you want to sell the 10 of them, you have $10 in profit instead of the actual $1 you would have had with your original $10. Okay, now when you make this profit, you collect your $10 in profit, you collect your $10 capital, and you give them back their $90. Okay, so that's the principle of leveraging. I hope you were able to get some gist. Don't worry, if you don't really understand leveraging here, just follow me. I'm going to make a full video on leveraging. Thank you.